In this video, I'll be discussing scalping, day trading, or swing trading. Which one should you choose? Which one should you choose? Honestly, that literally just depends on your risk tolerance. If you can handle a lot of risk, then I would say do scalping or day trading. If you don't want to or you can't tolerate a lot of risk, then I would say do swing trading. I'll clarify on each three of those and help you determine which one works for you. And also stay tuned to the end because then I will help you to identify which stocks you should be trading as a new trader. Scalping. Scalping is essentially you holding your position for a few minutes. Literally, it's exactly how it sounds. You're getting in and out of your position really quick. It's like really sniperish. You know what you're doing. You're executing within a couple of minutes. Day trading. Day trading is when you're holding your position for a couple of minutes to a couple of hours, but you're closing your position before the end of the trading day. So you're holding your position a little bit longer than scalping, but that's the difference between those two. Then you have swing trading. Swing trading is when you're holding your position for a couple of days. So typically those are people that like to buy their contracts on Monday or Tuesday, and then by Thursday or Friday, they're closing their position. There are long-term trading options as well, but those are my top three. Those are the three that I've been using throughout my trading experience. Which trader you become kind of just depends on you just literally jumping in and just trying to identify yourself within whatever works for you. So typically if you have like a busier schedule or you still work a full-time job, I really do not recommend day trading or scalping unless you are off that day. However, swing trading might be a little bit more comfortable for you because you don't have to stay glued to the charts. You don't have to constantly be monitoring charts and worrying about price action and things so much because you're literally holding your position over a couple of days, and that gives you the opportunity to profit and be comfortable. You don't really have to be anxious when you're trading. But scalping and day trading, you kind of are a full-time trader. You have that time to kind of get in and get out. Well, I take that back. I take that back. Scalping, you can still have a full-time job, but you definitely better know what you're doing. Because scalping, again, you're getting in and out of your position within a couple of minutes. So let's just say you've marked a key level and you know at that key level price likes to go upwards. So you're getting into a call position and you have a take profit level, and you know that it's going to hit your take profit level. That's more so for scalping. You're getting in, you're getting out very quick, taking your profit, you're done for the day. Day trading, you're holding for a couple of hours, maybe a couple of minutes. You're kind of just waiting for price action to kind of do what it's supposed to do, and then you're taking your profits, closing your position, and you're done. Swinging, you have a little bit more leverage when you're swinging. So it's really about your comfort level. Again, your risk management, your risk tolerance, all of those things kind of factor in what kind of trader you become throughout your trading experience, your trading journey, whatever you want to call it. You have to figure out what you are, what's comfortable for you, what works for you. Me personally, I'm more of a scalper and a day trader. Typically, I'm at the 5-minute candle. I'm in my position. I'm getting out. Sometimes I'm jumping into my position too soon, and then I have to hold my position a little bit longer to allow the trade to play out to my benefit. That's when I'm day trading. But scalping typically is what I do on a day-to-day basis. I know price action. I know exactly what the market is going to do at this particular level. I'm getting out of my position very, very quickly, taking my profits. And typically, I don't even get back into a trade. I know there's a lot of people that like to trade multiple stocks per day. I like to trade 1 to 2 stocks, just depending. And I do not revenge trade. Revenge trade just means that you took a loss on a trade and now you're like, okay, I have to make up what I've lost. Because when you revenge trade, you kind of just you don't really know. You're trading off of emotion. So it's more It's easier for you to kind of lose money when you revenge trade because you don't really have a clear direction. You just hoping that the market does what you want it to do. One thing I want to add is if you are a scalper, you already understand price action. I do not believe any new trader should be scalping or honestly day trading because you are new. You're still trying to get comfortable with getting in and out of your positions. You kind of don't understand what the market is doing at the time. You got an idea, you got a feel for it, but you're not really 100% confident. If you're not 100% confident, then you should definitely not be scalping or day trading. And I'm not saying that you can't or you can't be successful, but I feel like as a new trader, you should kind of take your time and learn everything there is to understand about how the market moves, how that particular stock moves. You have to understand your emotions because you can let your emotions cloud your judgment when it comes to entering positions and exiting positions because sometimes our egos get the best of us. And if we're down on a trade, it's more likely that you'll hold on to a position way, way, way too long. So this is just my sound advice because I've been there. I just want you to understand that there's so many things that come into play into just trading options in general. A lot of people don't like to trade options because they feel like it's super risky. But you just have to determine what kind of trader you will be and go from there. If you are starting with less than $100, less than $500, I believe you should swing trading. Swing trading. I believe you should be swing trading because it gives you more opportunity for you to make your profit without staying glued to the charts. If you are starting your journey and you're comfortable with risk, you're able to take a loss, you have a little bit more knowledge as far as trading goes or trading options in general, then I can say you can go ahead and start doing scalping and day trading. But again, I believe swing trading is a lot more comfortable when you're brand spanking new. If you're a brand spanking new trader, you definitely should be swinging and not scalping. My key advice, sound advice. All right, so you're trying to determine which stocks will be best to trade as a scalper, a day trader, or a swing trader. This is my watch list. I change my watch list up a little bit every once in a while. But hold on, let's see. Let me make sure I can still see this camera. Let me move this over. Sorry, I gotta get right. I thought I had everything set up, but it's not. All right, so pay attention to these stocks. If you can pay attention to the first 10 well, I would say the first 7 stocks on this list, IWM, QQQ, SPY, NVIDIA, Apple, Tesla. Do you see how quickly and fast those stocks are lighting up? That means that the price is changing. The stock is moving faster than if you look at the ones that are below that. I don't know if you can understand what I'm saying, but hopefully you do. Pay attention to how quickly the first 6 stocks move as opposed to to the last, I guess 7 through 14. Every time you see that stock lights up on the price change and a percentage change column, that's how much the stock is moving. It's moving that quick as opposed to the ones at the bottom. That's how you can kind of see. And then also typically the stocks that have lower that are lower in price, those typically move slower. So if you can pay attention to IWM is 223, the price is right now. QQQ is 527, SPY is 603, NVIDIA is 131. However, you guys know how NVIDIA is. NVIDIA is on the rise, so that stock moves, baby. The stock is moving a lot faster, the ones at the top, than they are at the bottom. So typically, when you're swing trading, the price is moving slower. So you have the opportunity to collect your profits as opposed to the ones at the top. They're moving fast. You need to know what you're doing because, again, you can be up on a trade 1 second, 2 more seconds pass by, you're down on the trade. because that's how quickly the stock moves. So again, as a new trader, you do not want to trade these stocks that move quickly. You don't want to until you are comfortable with those stocks and how they move. You're comfortable with understanding the price action of those stocks. So that's the easiest way for me to identify the stocks. Also, it's all about your risk tolerance. I'm going to keep saying that, and I know I've said that so many times. It's your risk tolerance. Whatever you're comfortable with, go ahead and trade it. If you feel comfortable, go ahead and trade it. It's all about your comfort level. So, I hope this video was helpful for you with understanding the difference between swing trading, day trading, and scalping. And again, if you like this video and you like to see more content like this, make sure you guys subscribe and turn on your notifications so you're notified when I post a new video. I will see you on the next video.